Hello, welcome back traders. Welcome to our daily forex forecast. And on today's episode, we are going to welcome to our weekly forex forecast. Yes. So on today's episode, we are going to find the right directional bias for next week and where price is going ahead. And we're going to talk about the especially the draw on liquidity for next week and what you should look out for in the following pairs: the euro US dollar, the dollar index, GBP, and Bitcoin. And just like we do this every day and every weekend to represent the weekly. So if this is the first time stumbling on this channel, do well to subscribe and turn on the notification button so you continue to get your daily forex forecast. As important as it is to understand the bias, this section of trading doesn't only tells you about the market direction. I also use it as an avenue to you know teach some little stuff, share my own experiences during trading. So majority of what is going on here is not only for me but for the community as well. So let's dive into what we have for this week. On the daily index, on the weekly dollar index, which is this is the dollar index. On the weekly time frame, we have seen, just like we point out in our previous week forex forecast. So I am very pleased to see price respect the areas we mentioned. Well, I did mention that this candle week, I don't want to see price go below this candle week, right? And price did not go below that candle week. And let me check something I want to add. So price did not go below the candle week, and price remain above price remain above that candle wick, just like sorry guys, let me take this off. So price did not go below the candle with consequent encroachment, and price rally higher and had a close above. And I keep mentioning that whenever we have a close above candle, it indicates higher prices. And what does this kind of candle shows? A wick below, higher prices; a close above, higher prices. So um the month is about to end, and I'm going to do the monthly forex forecast soon. But I want to add reference to what I'm going to share on the at the end of the month. I will have just at the end of the month on with this video, but yeah, it still did not give me a total confluence, since we still have two good solid days, Monday and Tuesday, for trading. So we need to see the month actually end. So Tuesday evening, I'm going to drop the monthly forex forecast so that you can get in sync with the whole monthly perspective and what you should pay attention to next month, and the areas you should be looking at for price. So I am very pleased that we did respect the areas we called out. And if you watch the video closely, I did mark out this area that day, that in our previous weekly forecast, that this candle week low, I want to see it purged. And yes, we can see the market push that low, right? Just like it purged the high on euro US dollar, and now we delivered higher. We had a close above, which indicates higher prices, right? And my highest draw on liquidity was this same candle high. And as a CRT trader, I understand, I trade ICT and CRT. So see, I kind of like the ideology of what CRT, right, very well. But I'm a majorly ICT trader, and most of my directional bias is determined by ICT setup and all. But the CRT has helped me because I take attention to it, and it has helped me frame some little bias. And we see that this is a CRT candle, and we see how price sweep the high, and just like we have called out previous week. Now this has indicated that the institutional order flow has changed completely. This particular week confirmed the change in the institutional order flow on a higher time frame. Now if on a monthly perspective, this change is a retracement, while on a lower time frame perspective, from the daily to the lower time frame, it is what, a reversal, which is a change in the state of delivery. But on a higher time frame perspective, it is just a retracement. All right, so this is a retracement to a higher time frame, which is the monthly, this particular monthly internal range liquidity, or the monthly OB, just in case the prices want to go deep into the premium. So now we have seen price close above, and our next on the monthly perspective, especially next month, is this high. But for next week, right, we don't have to keep projecting for that high. For next week, we have our previous week high here, previous week high, and our previous week low. So and our previous week low around this area. So let's just add it to the chat so that we when I'm referring to it, some of you that are new, you know what it is. Now every candle high, especially the higher time frame, the daily, 4 hour, and the weekly and monthly, these three candle, all the highs and lows are liquidity area. So, right, this is a buy side, previous week high, buy side liquidity. This is the week, previous week, because this week just ended. When we enter new week, it will now become a previous week. So this is a previous week low, sell side liquidity. Now where do we want to see price tick on the XY? We want to see price tick previous week high, right? Previous week high, which is our buy side liquidity. And how far can we go? We have a weekly intermediate what draw on liquidity around this area. This is what I'm talking about. We have this buy side liquidity here, which we can expect price to expand to next week. All right, so that would, for now, this will be our highest expansion. Now this candle week had a lot to say. All right, this candle week had a lot to say, and I don't know, but let me just add something to use to explain for you guys. Now, like we said, that every candle week, right, is an inefficiency, meaning that the price delivered there but not completely. The body tells the narrative, and the weeks do the destruction, and also the week indicate what, an inefficiency, just like the fair value gap did. The way you use your fair value gap, and we take the 50% of the fair value gap, that is how we should treat the candle wicks. Just like I've shown you guys how we treated this candle wick consequent encroachment. Now we have our 50% of this candle, which is equivalent to this particular candle high, right, which is the Monday 23rd week June 2025 candle high. We have our what, we have our 50% around the high, that of this candle week. Now if price gets here, each of this level, price is going to reject it, price higher, reject it, price higher, because each of those level is a liquidity levels, right, is a liquidity levels. But until we get there, maybe during the monthly forex focus, I might emphasize more on this, right? If you an ICT trader, you should understand the comprehensive. These are the things that CRT cannot touch you. But yeah, CRT just very simple and easy, right? It does not touch you in deep down. But when you want to trade internal range liquidity, especially when you are trading with a lower time frame perspective, you should take these areas into consideration. All right, but anyway, just find the ways that you can be profitable. I find mine, I am trying to refine, trying to create a sustainable wealth from it, but yet I am still a struggling trader, right? I am not ashamed to say it. because there are still some certain flaws, personal flaws that's attached to my trading, but I'm working on it, and that is just the progress. And this YouTube channel also helped me to stay one consistency, and also be able to record myself, knowing that, oh, this is what I see, and at the end of the day, if I watch it, it happens that way, then that tells me that in subconsciously my mind is receiving that memory and is saving it, right? Just like we all know. So this is it for the weekly time frame for the XY. Then we're going to go to the lower time frame, which is the daily. Then let's see what the daily, what we have on the daily. Now we know that before the market actually goes higher, we have to see lower prices. That means the market or the weekly time frame need to create its wick. The weekly candle wick that you saw, this is the wick. Imagine inside the wick we have these inefficiencies, right? This is why it's very important that you pay good attention. Now on this week that just ended, we have a fair value gap here, and also have a bullish order block here, right? A bullish and a fair value gap. Now I on the XY, I am not sure or in support of price getting all the way down to this price, meaning that is I am sure price is going to daily internal range liquidity plus turtle soup. Oh my god. Okay. Internal range plus turtle soup. Sorry, I just want to add something on our chat. So yeah. Now we have a turtle soup below here. This is our market structure shift, and now we have a bullish order block. This can price, which is on Monday, price might deliver into the 50% of this week. Now there are things like I've just explained with our Fibonacci, right? As an ICT trader, now Monday, I'm just adding this, I will remove it. Monday, price will deliver inside and use the premium to make a retracement, right? Right? We on the lower time frame we have a swing low. Now, for every candle delivery, there is always a turtle soup that is taken, either a lower time frame turtle soup or a higher time frame turtle soup. Now for this week, which is the week that just ended, what turtle soup did we take? We take this candle turtle soup, which is the low of this candle, is a turtle soup, and also has a key level below it. That is what added confluence, right? Or what we call CRT low, right? What just an added confluence. But no matter how you see the market is always the same way. We all of us just have different perspective. Now any perspective that works for you, then just go with it, right? Just go with the perspective that works best for you. Now we have a fair value gap here, and the 50% of that fair value gap was used. Look at how price respect the 50% of the fair value gap, and also we have inversion fair value gap. But let's not go back there to illustrate anything much. Now going in next week, we have our daily internal range liquidity plus what a turtle soup. That is, we if price get all the way down here, we want to see price start to soup it and go higher. Now because of this order block that we have here, I am not even much on support, right? That price is going to get all the way down to this fair value gap on the XY. But if we did, price should stay above the consequent encroachment of this particular fair value gap. That is the 50%. Price should stay above the 50%. Price should not get towards this range. All right, then if as long as price remain here, then we're going to look for any lower time frame change in the state of delivery that support price going higher. Then we can now take that as a added confluence to go and use with our euro. We don't trade DXY. I don't trade DXY. All right, so but if you do trade it, that's fine. Okay, but I just don't like the spread because I don't have much money, so I am trying to build myself up. So and I don't like the spread yet, so let's just focus on what we have for now. So now let's go. So now we have, this is the 4 hourly time frame. Now on the 4 hour, we want to, I would have measured our range. Always don't forget your range. Now on, this is the 4 hour range or the daily range. We have our range low and range high. This is buy side liquidity, sell side liquidity, just like our previous week low, previous week high. Which liquidity did we support on a higher time frame? We support buy side liquidity. Now what PD array is in discount level that support that buy side delivery? But that is what you should look out for. That is, price should continue to come lower and use. Now we have our 50%. Pay attention. Forget the 38% and up, or 38% upward. Look below the 50%. Below the 50% is our discount level. So next week or going in next month, if price gets below this 50%, is a good buy area. And don't forget, I did mention this candle week on Friday, that the 50% of that candle week should be reached. You see, like, I am calling this, right? Sorry, let me not just fumble, because I myself am not making that much money. So let's just focus on what is happening, right? So right, so we have seen a decline in the market, just like we anticipate on Friday, and now price has, we have a what, a fair value gap on the 4 hour time frame. This particular candle, this is a fair value gap, which is the fair value gap to support lower prices, that is going to take us toward our discount level, right? So sometimes if you are looking for a discount delivery, you should, within that local range, you should be able to see another premium um, level in price that is going to take us all the way lower. And now, aside from the fair value gap, we also have this candle as order block, and especially this particular big candle, and the 50% of this week candle week consequent encroachment, this 4 hour candle week consequent encroachment. Now we see candles with large wicks like this, and we treat them. If you go to your chart, right, if you don't trust this thing much, go to your chart, start to add a Fibonacci to most of these things, you begin to see magic, right? You begin to see magic, how price is staying below or above the 50% of a candle wick, which is the consequent encroachment of every candles. We see that happen here, and we also see that happen here too. But anyway, let's just focus on much on where price is going to go. We see that we have a fair value gap or a key level on the 4 hour that is going to take us down to our discount level. Now if price take us down to discount level, under, before the 62% region or 61% region, we have our daily internal range liquidity. So if price actually take us into the 61.8 or 62% region, we have an unmitigated 4 hourly fair value gap inside the daily fair value gap. I decide not to add that to our chart. So this area will be our long time what area to see price react and go higher. So as long as you keep following on this channel, we're going to continue to drop episodes like this that is just going to support our price bias and to understand the price and the institutional order flow for the market like this. So on so let's go to the lower time frame. All right, I'm kind of nervous too, I don't know why, but yeah. So this is the 2 hour time frame. The 2 hour, we have our sorry, on the 2 hour time frame, we have our 2 hour fair value gap here, and exactly a breaker, right, a breaker above. So now on, if you go lower time frame, we're going to expect price to react here using the week. So this will be our new what, premium level. Now that is when I said premium on a lower time frame perspective, especially the hourly time frame, right? This is a premium price now, which is our 61% region is of is here. That price should trade higher, then reject and go lower, right? So that is our major area we are going to look out for price to react from and go lower and take us to our higher time frame what key level and the higher time frame discount level using lower time frame premium, like use lower time frame premium to higher time frame discount and higher time frame discount to higher time frame premium. So this kind of a cycle enigma, right? Just like ICT used to say, this is a kind of enigma. And yes, this is basically what you should you should expect in DXY going in next week. Price can do otherwise, right? Nobody is, or I'm not really saying that my analysis is going to be perfect, right? Now on the lower time frame, we have our breaker, complete breaker block, right? This is our complete breaker block, right? So look how clean it is, and if you want to really have it, you can expand it like this. Now look how clean this breaker is, and our an hourly fair value gap inside the breaker as well. So now you with this breaker, we sure that we have a premium lower time frame premium level that is going to take us to higher time frame discount level, and we're going to see how price react to all these areas we've called out on next week. Right, we're going to see if how effective this is actually is next week. So nothing much to brag about or whatever, but the major thing is to make sure you position yourself to be profitable in this market, because not everybody are profitable. So if you find your way, if you can find your way out. So let me just name this H1 breaker. All right, H1 H1 breaker. H1 breaker plus FVG, plus fair value gap. So we're going to now we're going to just keep this on our chart and look how price react to this area going in next week. So let's go to our euro US dollar. Subhanallah, my laptop is low, 25%. Subhanallah. So I'm going to try to make this a little faster, right? So I'll stop explaining my bullshit. So let's see, now I am also pleased that on the Euro US dollar, look at our previous week candle week consequent encouragement on the Euro US dollar is the 50% of this is the 50% is exactly on this line, which is the external range liquidity rate on the weekly time frame. This is external range liquidity that was trade, and I called out that this 50% price should not trade above it, it should remain below it. And also I called out price should trade above this particular candle, previous candle high, this particular week candle high, and price traded above it. Now going in next week, I want to see next week candle, the week of next week candle to be within this market structure shift and this candle high. It should not go above this candle high, right? So it should remain below within this candle range. Now maybe next month, next month can take us to see this level before actually going, because every let me not go far because of my laptop battery. Now we have a down close candle, which is a close below, which indicates lower prices. So I'm anticipating for price to react on that area and take us lower and take us lower. And our highest draw on liquidity remain this particular previous week low and external range liquidity. Now I am going to add this current week low as our first area of what external internal range liquidity where price should seek before we reach the major sell side delivery. So on a lower time frame, we're going to look at within this range, where do we have our POI or our key level. So on the daily time frame, we have our fair value gap here, which I'm sure price should trade above it, but the close of next day candle, whether Monday candle or Tuesday, any candle that takes us all the way to this fair value gap should have a close below, which is the close should not the candle close or yeah, the candle close should not be above this particular bearish order block. So the price should close below it and takes us to this. Maybe the candle wick we only wick into this area as our area, into this area, and take us lower to seek for sell side liquidity. And if you are an ICT trader, this is sorry, if you are CRC trader, this is your good. Like me, this is your best what CRT candle. We have CRT high and CRT low, right? But I like to refer to it as my internal range liquidity and total soup and daily internal range liquidity and plus a key level, right? So on the 4 hour, where do we see price going and how do we project for the price? All right. So that takes us all the way to this level. That takes us all the way to this fair value gap, right? We have the 4 hourly fair value gap, just like we did on DXY. Now we also have that same level on a similar level, not the same, on the lower time frame, which is the 4 hourly time frame for euro. So and we have this area on euro, right, a fair value gap that has not been filled, so price should possibly fill it, take us to the discount 4 hourly range, then take us to higher time frame premium that is going to take us to higher time frame discount, just like I explained on the however, don't forget we also have an inversion fair value gap here, right? This become an inversion fair value gap. That means price can react on it, also in conjunction with this 4 hourly key level, which is 4 hourly fair value gap, to take us all the way back into this range. Now, when we go to the 2 hour time frame, let's check what we have here. On the 2 hour, we really don't have a fair value gap, but we have a concrete inversion fair value gap, right? A concrete inversion fair value gap. That is exactly, if you look at the levels with the 4 hour, they are exactly the same. If you look at it, they're almost exactly the same. So price should react here, trade lower, maybe retest on this other block because of the effect of the XY, then use the other block to go higher, reach here. We have an other block here. Now some traders are going to put their stop loss right, or take their entry and put stop loss above here. But now if 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 they forgot the that this is a liquidity area, especially the higher time frame total soup, to take us lower, then and again is in what, in premium price, is in at equilibrium, let's say 50%. So which doesn't make it a very good order block, but yeah, it's an order block that might price will go react, come lower a little, then go higher. Now we have our H2CB, which is our fair value gap on a 2 hour time frame. That is our smaller time frame what area that price should react on, and after sweeping out the liquidity and pricing above the total soup, then should take us lower to the higher time frame objective, right? So this is just it, and this is our order block, just like I've mentioned, and we see that price should we see reasons why price can and should go lower into this level. So if anytime price provide an opportunity above this daily internal range liquidity and turtle soup into the daily key level, that means you should never in your life, or sorry, you should not try, you should not try to buy at this area. Majorly, if you want to be a buyer, buy within this range and offset around this range. If you want to be a seller, don't sell around this range, sell around this area and offset on this area. That is my form of rules going in forward. So let's go to GBP. What's my percentage now? I have 21%. Okay, I still have time to go a little. So at least if I can record, maybe I'll try to post it later. But anyway, you get the video anyway, so that's just what matters. So please, I'm just trying to grow. Subscribe to this channel and turn on the notification button. If you want to really help me, comment on this video, just whatever you want to say. And even if you want to ask question, you can also join my Telegram community by using the link on the video description. So on GBP weekly time frame, just like we've called out previous week that this candle has a close below, then we should expect continuation in price, and price should not price above this candle high. And we did say that price didn't reach that level and price rejected and go lower, and we take this particular candle low for we price take this particular candle low, uh, and we reject lower and go higher, but we still have what a weekly close, a weekly what a close below candle on a weekly time frame. The blue line I added to the chart represents a shift in market structure, a market structure shift, which if price should get there, should just tap on it and reject lower, because because cable is more likely not to go all the way higher like the dollar or GBP, like the dollar or euro. I think this is my battery that is about to die. It's not allow me to pay actual attention the way I want. But anyway, now we've seen on the lower time frame, on the daily time frame, we see our key level here, just like we have on DXY, on euro. GBP also have a fair value gap here, but now we have our market social shift here, and we have our order block, our breaker block around this area. So, or order block, whatever you call it, but you can call it mainly a breaker block. Now this breaker block low, price should test on it and go lower. So on GBP, we might not see this particular daily internal range liquidity taking, or this turtle soup taking, right? We might not see it taking, and price will continue to go lower. And our highest expansion, which is on the monthly perspective, especially going in next month, our draw on liquidity remain here, but going in next week, our major draw on liquidity is here, and also this relative equal lows that's lying down here. So this is just it for the daily time frame. Let's see where price should react on the 4-hour time frame that is going to support a lower time frame discount level. So we have our inversion fair value gap. I decided not to add that to my chart. We have an inversion fair value gap. If price react to it, use it to take us to what a premium, right? To take us a lower time frame premium that is going to take us to higher time frame discount, right? So that is just the price delivery cycle, right? So this delivery to this level, if we now is highly likely not to see GBP price above this internal range liquidity. But if we did, we also have a little 4-hour fair value gap here, which might be at extreme premium that price can react from. But don't forget your breaker. We have a breaker here, so this breaker should also price should remain on this breaker, but price should tap on this market structure shift, right? I want to see price tapped on that market structure shift. All right, so that's basically the 4 hourly of show. Now if you come here on the 2 hour time frame, we see this is our 4 hourly inversion fair value gap, but this is also a 2 hour order block. So we can anticipate for price to come all the way to this level. Let me just put this on the chart. Come all the way to this level, order block plus order block plus, that means we have two key levels: an order block, inversion fair value gap, and what, liquidity. Then take us to higher time frame premium, that is going to take us to lower time frame discount. So something like this is what I'm expecting to see on the on GBP. Now I don't day trade GBP, I only swing trade GBP. So I am not going to react on GBP until GBP gets to our premium or our premium level. And as soon as GBP get to the premium level, we are going to take a long time setup, right, and offset it to what lower time frame area of liquidity. So I already understand what I want to see in price and how I want price to react on these areas. So I'm going to take that off, and then let's go to the lower time frame. Now on the daily time frame, we see, sorry, on the hourly time frame, we see price has already show willingness to go lower, and inside that our I need to, I need to just add this to our chart. So inside that our 4 hour inversion fair value gap, inversion of FVG, we also have a daily breaker, sorry, a daily breaker, this particular candle, a daily breaker, and also daily fair value gap. So which is a very good element to expect uh, for us to use and expect price to use to go higher. We have a bearish order block here, and within our breaker zone, so price might not get all the way to this level. So on a lower time frame, we really don't have a deep premium fair value gap, but we do on a 2 hour time frame. So that is enough for us on GBP. Then let's go to Bitcoin. Well, Bitcoin is a hell nutshell. Now, well, I let me not take credit for what I did not fully do, but God did. I called out this thing very perfectly in like previous, since I've been, even since I begin this channel, that I begin this daily on this channel. I keep telling my guys that this particular area, if price should react to, this is in order block, a bearish order block, right, and a fair value gap on a weekly time frame. Price traded into it, just like I was calling that price Bitcoin should go higher, price above this level and reject. Now we go higher and go deep into it, so deep that I was waiting for price to have a change of character, or sorry, a change in the state of delivery on a lower time frame before going higher. So we see that price has rallied higher, take our what, external range liquidity plus turtle soup. This particular candle high was taken, which is external range liquidity plus turtle soup was taken, and price reject and come lower. And also we can see this is a very good CRT candle. This is CRT high, CRT low. Now this CRT candle, this particular candle now become a bearish order block. Now going in next week, I'm fully aware that we are going to have a fair value gap on a weekly time frame on BTC, that is Bitcoin is likely to have a fair value gap, which next month is going to trade, the high of next month is going to come back to that fair value, weekly fair value gap, to go lower. So now where can we expect our high, which is our candle high, next week candle high, or within this level? So I'll also bring your attention to this area. All right, so let me just use this particular thing to illustrate it. Well, this is our last time frame. So don't look at, just look at the fair value gap. So now our candle high next week, the body of the candle, which is whether daily or daily, yeah, daily candles should not close above here. The week of next candle should be between this uh discount of this fair value of this, so of this candle week. The 50% is here, but we should see price reach around this area and go lower. Then the fair value gap we here will be formed between this premium level to this other candle, our CSD, our change in the state of delivery or market structure shift. So that is the level I am looking. Let me just add something to our charts to illustrate it. Since so these are the levels price should respect. Let me make it big so that you guys can see. These are the levels the I'm expecting next week candle. The week of next week candle should be between this blue line and this black line. So right, this blue line and this black line. So the week, that means the week, the candle week should be, because the candle will open, create a week higher, go higher, create a week, then continue to go lower. This is the week, and the highest expansion remain this, for next week remain this external range liquidity, which is this sell side liquidity plus this monthly external range liquidity, before we see price get here. At the end of the month, I am also going to give us our monthly perspective, which is going to be on Tuesday. Now, this is where it get more interesting. On a daily time frame, we see that price has already reacted off of this area, which is this fair value gap, created a swing high that broke below, created that, turned this into a bearish order block. Now, next month, right? Next month, the candle next month candle high should be above this particular candle, which is use this one as a monthly turtle soup for monthly, which is monthly premium for monthly discount. Just, well, let's continue and see how price actually did. So now we have a bearish order block, and also now I can shift this into this area, and we are expecting our next week candle, the candle week, to be between this blue line and this black line, right? So we're going to go on a daily, on a more lower time frame to see any key levels that support. Now the daily key level already supports. Now we want to refine this key level into the lower time frame key level that is going to support it and give us more concrete levels that our price is going to react from and go lower. So we go to the 4 hourly time frame, right? And this is what I have here on the 4 hourly time frame. All right. Now I am using a candle week. Now we have our turtle soup. Now for a daily candle delivery, there should be a 4 hour, 2 hour, or 1 hour turtle sweep. Not even a 15 minutes. 4 hour, 2 hour, 1 hour turtle sweep, turtle sweep that support, that is, which is a swing high, that is that support that support a liquidity sweep or liquidity rate for lower prices, right? So this is what I'm expecting on Bitcoin going in next week. We have our 4 hour bearish order block here, and we also have our breaker block, which is this particular candle. All right, the wick is here, and price should react on that candle wick and take us lower, right? That is what I'm anticipating for. Now this will now serve as our turtle soup. Now what does that mean? You cannot buy, you can buy, let's say you want to buy to this area, you cannot buy when price is above this turtle soup, but you can buy when price is below this turtle soup. Now we have a low here too, don't forget. You can buy when price is below this low, but you cannot buy when price is above here, and you cannot sell when price is below here, right? This is just just a very one of the rules, a very important rule, right? You cannot buy, you cannot sell when price is below here, and you cannot buy because you are trying to buy on a lower time frame, extreme discount level, right? And you cannot sell while price, so you cannot buy why price is here, but you can sell from here and buy above here. Let's say price on Monday, price did not get all the way to this level, price continue to come lower. Now when you see any opportunity that indicates a buy, then you buy and take price into this level, then you sell, offset your buy position and take a sell position to this lower. But since I don't swing, I don't normally trade Bitcoin like that, so I'm going to wait for price to get on. When price gets to this level, especially this our market structure shift, this blue line, as soon as price get above it, I'm going to watch Bitcoin more closely to get my own directional bias. So let's go to the 2 hour time frame. If you go to the 12-hour time frame, now you have a clean. Now what is more clean? What could be more clean than this? A clean bearish order block, a clean bearish order block, and our clean breaker. So the more you go lower, the more you can refine your POI, right, or your point of interest where you want price to react from. This is a lower, a 1 hour order block, right? And this 1 hour fair value gap has already been taken, and a 1 hour PO breaker. So this is just it. Now we have seen relative equal lows, so I am going to put this on here as our sell side liquidity. Sell side liquidity we've seen, which is equal lows. We've seen relative equal lows on this price. And so since we have these relative equal lows, we should expect price to, so I wanted to only show on the 4 hour and the lower time frame, not so yeah. So if price take this liquidity before, maybe before going all the way to this level, then you can buy from here, offset here, then take sell from here to offset around, to offset even below here. Because if you are buying, you are going against institutional order flow, and if you are selling, you are going what in direction, and that means you are in sync with institutional order flow, right? So this has come to or bring us to the end of this forex forecast and our forecast for today. And I hope the video is not too long for you, but yeah, it is very interesting. And please like, comment, and subscribe to this channel. God bless you, and see you on Monday.